Here we are.
Yeah, good.
Yeah, doing well.
All right. This is coaching session for October 20th, 2025. So for my check-in, I just was describing an AI workflow where I've hooked up a mass video converter, which will take about 2,000 videos that I've recorded over the last few years, turn those into MP3 files, and saves them in an output directory. That output directory is now the input directory for an AI agent that will systematically uh, transcribe those into high quality text files automatically and put those in an output file. And then every couple hundred of those I can combine into one giant meta PDF file to make a source for the AI. So I get this damn production line going in the background. Thing is massively good, massively good. So my moment of Zen came. I have the I have this idea for a pseudo rag. So a rag is a um, uh, let's see, what's it called? Retrieval augmented generator, right? And what that does is it uses the power of the AI to be a reasoning device, but instead of searching the web or its own training files, it'll defer to whatever local set of expert files that you've created, and it'll look inside the files that you've fenced off for its expertise. Well, if you use Google Notebook, the size of that uh, the size of that rag can be about 900 million words if you maximize the size of each text file that you dump. So that's what I'm in the process of doing. I got about 300 million words in my rag right now. But then it occurred to me, since these things all have reasoning power and search, I said, I want you to conduct a search and assemble a pseudo rag, which is you will have searched the entire world over as a very meticulous world class expert and find only the highest quality reference files that are 0.01%, the top 0.01% in the world based on um uh, measures of quality and expertise. And then from that, construct the answers to this list of questions that I'm going to give you. So I tried that and I said, the list of questions that I want you to create are the list of questions that an expert would construct if they had access to that pseudo rag. So go out and find me the best 1,000 questions that
Hmm.
novice traders should ask based on best practices of the top 0.01% of reference files. So I don't even have to go find those 0.01% reference files. I can just tell it to go search for those, construct its own little temporary holding area, generate the 1,000 questions, and then write me a 300-word answer for each of those 1,000 questions. And write those in batches of 25 so that I can verify the question and answer after each batch. I can tell with a quick scan if it's
I think
still on the gold.
that could be a next book.
It's an encyclopedia
Yeah.
because 1,000 essays at 300 words is another 3 million words, which is about 10 books. So then after what I can do though is I can take that 3 million words and then crunch that. So that's already had a couple 0.01% quality checks, and then that becomes a good actual rag to actually create. So now instead of just using the pseudo rag, I can actually use the pseudo rag to create the content, which I can quickly verify, and then that becomes the actual rag that I can use, so it reduces some of the risk associated with the thing. Uh, it's terrifying what you can think of when you're furloughed from government work.
Mm.
These idiots are now talking about keeping us out till to Thanksgiving, and I just sent a note to my boss because he sent me a note says, "Hey, got some good news. They may allow us to come back to work without pay." And I've said, "Don't be in a hurry to call me
Mhm.
because I'm actually getting a lot of work done and I'm trading very well." And I'm now seeing the opportunity cost of teaching for the Army is very abundantly clear to me. You know, I'm making a month's worth of pay every day.
Mm.
And it's kind of like, well, why was I in such a hurry to go back? That's what I answered. I love the students. But at some point, you got to say enough is enough. And so I sent a note to the boss today. I said, look, if the administration ends up mass firing all of us guys, and a bunch of us can already retire, you better figure out the procedure so that we can retire while being fired. That would actually be a good deal for me if they did that, because then I would have plausible deniability with my wife. I mean, I'm still working there because she likes the security of having a good paying job and benefits and retirement and matching funds and all that for the 401k. So she, don't mess with a good thing. But if they were to fire me, then I that would be it wouldn't be my doing, you know. And I've already talked to St. Mary's University. I think they want to hire me full time to teach there, which is fun because now I get to teach doctoral students, and it's a different uh, classroom experience. Like I last night, I wrote the entire workbook for the whole course, and we got 8 sessions. I need 5 discussion questions for each lesson. Give me world class answers and discussion points. Give me all the references. Write me a 1 page and a 5 page backgrounder for each one of the discussion questions. Assemble that into a book. Make that a workbook. Done. 20 minutes, and I got a damn. It's ridiculous. Uh, it's almost taken the fun out of it. AI is so goddamn smart. The real secret to all this is that it's not the haves and the have-nots. It's the haves that know how to use it versus the haves who don't know how to use it. That's where the real advantage of knowing AI is because you will leverage the expertise against people that use it but improperly. I mean, there's a strong argument that guys that are in the trades and the craft don't need AI at all, but for everybody that's a knowledge worker, if you aren't spending money and time figuring out how to get better, you're putting yourself out of work. You won't lose your job to AI. You lose your job to somebody that knows how to use AI. So
But
that's
I still think that there's a special benefit for being a creator. And if you have a vision, because
yeah,
there's one thing to automate work, but to
yeah,
actually have a vision and be able to build something or say
yeah,
something,
yeah.
that's rarefied air. Yeah.
What I have found it really helpful for me is that um, I can now use it as a special research assistant to get me up to just about world class understanding of things, like at the limit of human knowledge, where the cutting edge is, and then to be able to see over the fence, see where it runs you to the edge of knowledge really quick, where the genuine creativity can start kicking off. So if you get a bunch of those vantage points, you're not locked into just observing from your own isolated expertise. You can get pseudo expertise, pretty good, pretty good level of expertise pretty quickly, and start looking for connections between different different pieces of content. And I've noticed that that has really helped my own creativity out quite a bit. Um, yeah, so the AI will make you more of whatever you are, faster in public and with transparency, much like alcohol and fame and money. So it behooves us to learn how to use that stuff properly. Anyway, that's my check-in. Sundeep, what you got going? Oh, do I get the recording on? Yeah. What you got going on? Let's give me just a quick check-in and then we'll go around the horn for
Yeah, no, everything's
reports.
fine. I've just been a little bit busy at home with guests and some work around the house, but otherwise, regularly trading and it's all good.
Cool. Sam, how you doing?
I'm doing okay. I've been a little frustrated and doing some strategy switching, which is not helpful. Part of why is like many traders searching for consistent profitability. You try this strategy that you looked at and back tested yesterday
Yeah.
worked, so you try that the next day, and then it doesn't work the next day, and then you see another strategy that would have worked,
Yeah.
and then you try that one, and then that one doesn't work the next day. So I got caught in a little bit of a vortex trying to get comfortable with that. And now I have found something that is a blend of the Spring Crossing and Collapsing Dragon
Yeah.
that has what I believe is a compound critical state that's interesting using Camarilla pivot points, R4 and S4, the way price moves either breaks out or collapses from there.
Hmm.
I've got a scanner set up to look for dragon crosses at the R4 and S4 point. I did not trade that well today, but in looking at the trades that I made, I made money today, but I didn't make a living.
Yeah.
Um, if I had flipped everything that lost, um, everything, I would have recovered on everything. But so the bad news, too much strategy switching. The good news is I think I found something promising.
Well, I'd also just I'd like you to just keep in mind that at this phase of exploration, you're really getting paid to quickly evaluate and either discard or prioritize strategy. It's like you want to be wide and broad before you prematurely specialize in my feeling. I mean, you want to be able to find something as soon as possible that looks like it'll carry the freight, but also use the creative spark now to be finding scouting for new systems and different ideas and rapidly evaluating them. There's a certain amount of that you're paying for information right now. You're working for information as opposed to working for returns,
Yeah,
raw
where I
returns.
think I've got the math not working on my side is
Mhm.
I am it's two issues. One, when I'm mixing strategies, I'm
Yeah,
blending, I'm muddying the probabilities of both, and I'm
yeah,
getting mud. But also sometimes I'm taking a full size position, and then I want to take a second position, not in the same, not adding size, but take a position in another stock, and then I'm out of buying power, so I take a half size. And
yeah,
so what happens to me over the course of the day is that my half size wins and my full size loses.
yeah.
Um, and then I regret just only taking
Well,
full.
part of one of the ways handle that is sort of letting the full cutting the full size position to a third so that you got more bullets of a smaller caliber and then with more rapid fire like what uh, uh what Eric Moe is doing with he's calling it the Hogard press for the trader Tom Hogard, very well regarded, which is small initial positions, very tight stops, and then rapidly scaling as it starts to confirm, just add and add fast, not waiting for confirmation but the first hints and allegations of success, and then quickly scale in that way. And to do that, you got to have more ammo with but smaller rounds, where you can build up into it, and that way you preserve some of your flexibility as new ideas come along or new opportunities. Um, the only downside you have to watch on that one is a different problem, and that is not getting all the capital put to work efficiently. You know, you're at
Yeah.
like if you're prepared to take five positions and you've position sized your bet size accordingly so that I could get there, and then only two come along, I might end up only having 40% of the capital employed, and now I have 60% sitting around not working.
Yeah,
So
I would love to see that live traded because the strategy that I'm doing now, I can reliably get 2R on. I either lose a full R or I get 2R
yeah,
um, on every position, and so the math on that ends up being really good because if you're north of 35% or 40%,
yeah,
that makes money. But the half size positions sort of kill
yeah.
me, so I think I need to commit to full size or nothing.
Well, the idea is, well, for instance, what the Hogard press idea would say, uh, and you have to have losses that have the following characteristics: they lose fast,
Like
and
execution size losses.
yeah, it takes and it just loses fast.
Yeah.
But the two R wins are things that maybe take longer, but they kind of never start, fall all the way back to almost lose one R and then continue, but they sort of move out nicely and then grind your way to two R. Well, in the Hogard press idea, what you do is you now say, well, let me start the trade at its weakest point where it's most likely to lose one R at a half a position size. And then at half an R, put the second half on, or put a full position on at half R. Now I've got one and a half at a half an R, and I still got one and a half to go. And I can put the second half position on to get two. So I want to get two position sizes on before it gets to 2R.
Yeah, so
But if it fails early, I'm only losing on half an R, half a lot, if I can say it that way.
yeah,
So
can I share a screen
sure,
real quick and
yeah,
show you because
yeah. Let me
because
get
actually
Ashay
oh
real
yeah, yeah,
quick
yeah.
check
I'm
in, and
sorry.
then we'll jump in on your stuff. Sort of
Apologies.
got caught up
No
in the
worries.
narrative. Doing okay?
Yep. Can you hear me okay? Yeah, you got me, right? Okay. Quick check-in is everything is going well. I'm implementing some of the feedback you gave me on looking at the 30-minute and
Yeah,
10-minute charts.
yeah,
I've been working on that. I did get live last week. I got enough confidence with the server behaving properly. Um, but towards the end of the week, the entries and exits weren't quite exactly as where I would want them, so I need to make some adjustments on some of the settings, which I did do over the weekend, and watch some of the videos that you did talking about this Hogarth press and some of the Eric's videos
yeah,
and his symbols. But anyway,
yeah. Okay,
um, good progress.
yeah. Go ahead, Sam.
Yeah, I really want to go and watch that. Okay, so I'll share my screen here, and what you made me think of where I could sort of blend a press is, in a sense, trading one thing at full size, but adding as it's starting to work. And
Yeah,
so I'll show you in a nutshell what I'm doing. I mean, I think about this as a collapsing dragon or a spring cross in a way. But what I'm scanning specifically is the rule set is I want two candles. So these first two of the day made sense for XLU or were captured. I
yeah.
want two candles not touching the dragon. And then I want a third candle within the range of R4
Okay,
touching. And R4 seems to work as it confirms breakouts or massive failures. And so my rule set is I want two closes under R4, and then I take one tick below this candle, and then I risked to the top of the second candle. So I'm always operating on two. So my risk was here,
Yep.
my entry was here. And then so you can see this went to 2R. But I had opportunities here, right, in these collapses or these consolidations to consider adding size. But that's effectively the rule set, and it works in both ways. And so,
Yeah,
I need
this is where I would naturally be getting short right about here,
right about where?
right at the blue circle.
Oh, I guess I'm seeing my screen and not where. How would I see what you're seeing?
I'm
Look
annotating on
upper
your
left,
screen.
upper left.
Yeah, but for some reason, because I've got multiple monitors. Let's see. Oh, okay. No, no, I'm not.
So I see like the RL10 rolls over here. So you're not seeing that?
No, for some reason, I got to figure out how to see. I'm only seeing my screen. Oh, now I am. I'm sorry. I see it now.
Yeah. So the way I look at that is that you get that nice run up, and then the R10 rolls over, and then I see dragon crossing the VWAP, leaving the dragon. So I'm short right there.
Yep. So you're short. So that's where I was short
Yeah,
effectively
and
with.
then my stop, I just go to the hump of the dragon
Okay.
as a standard box. Now, when this rolls over here, Hogard would be adding here, which is a kata 2,
Okay.
because you have the RL10 is essentially doing this. And the fact that you have lower highs. So this line right here is the RL10. When the RL10 comes
Not
down,
and not when it breaks that low of that green bar. The
right?
first.
Yeah, I just go here's this will get you in a little quicker. So I treat the RL10 as the actual price. It's a smooth price, so it's very precise on where it turns. So if I have this this piece right here was the peak of the RL10,
Mhm.
and then it comes down, makes this little wiggle. So now what I have is I have a high, a lower high, which now makes this little piece right here. This is the collapsing dragon is below this dotted line. So what I do is in this little eye of the storm, that's the kata 2 short. So I will get short the second position right here.
A full second position,
Yeah,
and the risk on that one is to
same one,
where.
same one. And on this one, you can actually when you get this little wiggle, you can actually use the VWAP so that your VWAP is right here.
Yeah, it's the pink line.
Yeah, I think that's the V. Oh, is this orange line is your VWAP or is it
No, the pink line where you have, I think
this one
there's like
here?
a K over it.
This one here? Oh, okay,
Yeah.
I see.
Yeah. Yep.
Sorry. Okay, I know. Okay, so this is your VWAP.
Yeah, that
Oh,
descending
okay, I see. That was the
price
spine of the
action.
that's the spine of the dragon. Okay, yeah. Uh, so the first short when the R10 rolls over and you get uh dragon, spine of the dragon, southern skin of the dragon. I just get short as that comes out of the dragon. So I'm short here. And my initial stop is peak of the dragon.
Okay.
This thing, the R10 does this, that lower high, and as soon as that rolls over, I put a second position right there. And I'll use I'll let's see, where's your VWAP on that one is like right here. So that's basically the same, it's almost the same exit as the first one, but you can now drop you can drop the stop on the first position so that both stops are moving together. And pretty soon on that, when I get two positions on it, it doesn't offend me to use the PSAR dots. So you can get a second position here. If you want to be very aggressive, you can then take a third position at the collapsing dragon. So you have this. So you got short one, then this thing rolled over. So you get one inside here right at the turn. And then when that crosses, another position. So now I get three. So let's say I put a half and one and a half, or and a half. So now I've got, at this moment, I've got two full positions on. My stop is probably somewhere like right about here, so that even if this thing reverses, the gains on these two positions will offset that one. So I'm actually I got two full positions on at no lose plus dinner for two. So as this thing is falling down, I'm making gains on two full positions. Now, if this was my wrist box, this yellow box that I'm drawing, 2R is probably like right over around in here. So by that time, I've made 1R on this one, 1.5 on this one, and 1 on that one. So that's times a half is 0.5, 1.5, and another 1 on so 0.5. So I've made 2.5R at this point. But my actual risk was only on half a position there where it was most vulnerable.
Well,
So,
that's what I was going to ask when you said at the top there where you were at the second position in
yeah,
the Kappa 2,
yeah.
if that started to move against you and you had 2R at risk, at what point would you pull it? Would you let the whole thing go or would you pull it at
Now,
1R?
on this one, it's the VWAP because when this thing rolls over and makes a kata 2 and is dropping and the VWAP is decaying, you never let it go back across the VWAP. So,
Even if it wicks it because
yeah, you
that,
won't take a full,
yeah,
yeah. So if my initial risk was here, by the time I get two positions on, my stop is at the VWAP, which is right about there.
for both, you're trailing
Yeah,
it.
yeah,
Okay.
yeah, because now I've got 1.5 positions on. And if I take that loss there, it's not, that's going to be right around 1R off the original risk.
Okay.
So, but if I'm winning, then I'm already making gains on one and a half positions. So the idea of this Hogard press was that you get this move at starting off, and you get quick hits to rapidly build the position, tight stops, and then let it run.
Yeah,
So that
I'm gonna
when you
try
make your
to.
2R, you've got two positions or three positions on, rather than one of the alternatives that we had was when you have a very tight wrist box, like say an R10, which is 1/10 of a range stat. So we know that if I get short there, and that was the high of the day, I could get nine of these boxes on the way down. And if it makes a range stat move. So my brother would add every 2R, just automatically add another position. So if you end up getting an 8R move, your first position earns 8, your second one gets 6, your third one gets 4, and your fourth one gets 2. So you end up getting 20R instead of the 8R on the first one.
I never have risk that tight. Can I show you another trade and see
Sure.
if you would have done it differently? Um, okay, so same just for the group, the same logic. Um, I'm looking for, I'm scanning for a spring crossing or collapsing
Is
dragon.
this the open of the day?
So yeah, this is pre-market in the light gray.
Okay,
So
and here's the
just
open.
to be less
If you're
confused.
not short right there, I don't know why.
Okay, so well. Well, if you here, if you remove that, yeah, just for a second. So where this showed up on my scan was, okay, we've hit S4, and now I've got spring crossing activity. So on a 5 minute chart, when you touch the bottom of the dragon on a 3 minute chart, you would have crossed the spine.
Right.
So my logic was, um, I want the second bar that closes. Oh, actually, did I take this? I didn't take this trade here. So I did not take this trade. So what I would have taken is, by my rule, is two consecutive of the same color candles to close above. I would have taken one tick above, risking to the bottom of this candle, but I didn't take that. This is the one that I lost on. So on this second one, this candle closed above, this candle closed above. So I went long one tick above here and risked to the bottom of here.
Yeah, fair enough.
So I
Yeah,
flipped.
that's an automatic stop and reverse right there too, but
I did, and I got that.
yeah,
So
mostly because I look at this
yeah,
because what I have here is I have a the constellation of. So now if I'm long inside here, I think you said you were long in there,
yeah, I was long right there.
somewhere in
Yeah,
here.
exactly where you're
Yeah,
drawing.
and with the stop like right about there.
Correct. Under that, yeah, that
Yeah.
first.
So as soon as this thing rolls over, I have to. Yeah, I automatically have to be short, and that's you could actually put two positions on, right there
Ooh, okay.
because you have such a clear and decisive downward. Look at the SMA 30. Look at the Bollinger Band means. This thing
Yeah.
is down in such a huge way that you've had one strong move from the open down. The rebound barely even budged it. It made a lower low. That's a that's another positive sign. So you got a positive sign it's going down. This little R10 wiggle is another positive sign it's going down. This little rebound here, which got us long, quickly rolled over and it made a lower high. So you now have three pluses that it's going down. So you now expect the size of this move from the open to here, you expect to get another one of those, which it almost did to the penny. So I'd like to have two positions on here and add a position here.
Yeah. So what I have to do is just trust the system. Because the issue is on Friday, I did four bullets, same logic that you're seeing here. Everyone failed. The initial trade and the stop and reverse failed. It was just red across the board. Nothing
Yeah.
worked
So
on
what
three,
I'm suggesting is like you just take those bullets.
and you cut them up.
Yeah. So your first spec now, when I have a really tight stop, I'm only taking it on that. And then as it like when it reinforces, like right here, I can put those two on. And now I'm at a full position and I just had the confirmation that it's working.
Well, it's an interesting way to start the press, like
Yeah.
really early. Um,
And then this position here, I can put the whole thing on because it's doing this.
because my trading style is definitely that I would prefer to just have one trade, and I'd
Right.
love to add size
Right.
and be done
Yeah.
for the day, rather than playing probabilities
Yeah.
for
I mean, so
hours.
in terms of the coin flip, if you're at 50-50, oops, and it's paying 2-1 all day. And then if you just keep it simple, what that allows you to do is have a span of control. Let's say your span of control was four. You can have four independent trades going, each one of which has these characteristics.
Yeah.
Instead of using a lot of, I'm using that's my symbol for a lot of brain power right there. I'm using a lot of cognitive effort to try to micromanage, smaller positions and add them to it. unless you get it to where it's by rule, you know. But if you're manually driving it, the energy, the cognitive energy that it takes to manage four simple rules is probably consumed on just that one. So there's actually, if you have a wide enough stop and you have lots of opportunities and you got those kind of numbers, what you want to do is take every possible simple trade you can, um, up to the limit of the capital. And if you can automate the management of it, like keep 70%, like if I can get short here and then my stop gets me to no lose plus dinner for two, and at 1R I invoke keep 70%, that's pretty easy to automate. And that thing now is just uh go. Just go and then tell me how you did.
Yeah.
Um,
Yeah.
what that misses are some opportunities to add positions. And here's what I said. This has to do with the theory of multiple time frames. So if I'm trading fractally and I'm on 3 minutes, 10 minutes, 30 minutes, 2 hours, each one of these is kind of fractal to the next one. And if I get a supported spring crossing and that's the low of the day, and so I'm here, and I've given it one R10 off the bottom, I know that the maximum reasonable move of the day is a range stat. So I'm not allowed to be surprised if it moves a full range stat. And that means that there's 9 of those boxes all the way up, right? Now, what'll often happen is your supported spring crossing, let's say you're on a 3 minute, and you may find that your supported spring crossing rarely gets past 3R. Like it goes up to 2 and comes back, and you end up cashing that little win right there, and that's good. Once in a while, it will not fail here, but it'll go to that 2, it'll go to the 3R, and then has another move up to 6R. Well, what's happening on that is that the big move down and then your little retracement on the 3 minutes looks like a tradable pattern. To the 10-minute guys, that's just noise. But when you get to 3R on a 3 minute, that actually makes them think, oh, dead cat bounce, and then they're going to come in and pound it down. So actually, the closer you get to 3R, there's a moment here at a critical state where if the guys on the original trend want to dead cat smash it down, then it fails fast. But if they decide to reinforce it, like an SSC on their side, that thing can go to 6R very fast. And then what's a good trade for the 10-minute is noise on the 30-minute. And then at 6R, those guys decide to come in and get on board. So what you end up getting in the life cycle of this kind of a trade is when you get a compound critical state, you end up getting your little 1R, 2R, 3R on 3 minutes. That's actually one big move on the 10-minute. And he
Mhm.
goes to, so you see one and you uh, keep two and hope for three. And then, so this is the 10-minute guy. And then that looks like one big move for the 30-minute guy. So when you have a compound critical state and it's oversold for everybody on all their time frames, each guy on his time frame is waiting for just enough retracement to give himself a comfortable cushion so that he can trade that, and then maybe he's willing to go. And if on the 3 minute that was your cushion and now you're going, the 10-minute guy is here. The 30-minute guy needs to see that much, and the 2 hour guy needs to see that much. And when you get these runaway moves, like um, Eric got last Friday for 52 R day.
Good God.
Well, what happened was he was Hogard pressing down in here, and then instead of failing, where we have every reason to believe it'll fail most of the time, it just kept going, and so he just kept pound, 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 and it always acts as a surprise because we get used to seeing things on our time frame. But there is
Well,
a small fraction of the traders in the world who are looking at exactly the same time frame you are. And so their buying and selling may not make sense to you on your time frame. You say, I don't see any support and resistance there. I don't see what I don't have any indicator that tells me that guy's should be looking to get out. It's because the guy's looking at a different time frame.
the Hugar Press is a really interesting thing to think about too, especially within the context of this trade, because one of my favorite things that I used to do is so these two white lines and this dotted, this is the 20
Yeah,
minute opening range.
yeah,
And then this red dotted line automatically is the one measured move of that.
yeah,
And so, once you break the opening range and you get real close, the measured move becomes just a very strong magnet. And on this run here, if I was thinking Hugard Press and I saw this third push down, you could be taking shorts, just adding size
yeah.
under every single candle on your way to this red line and feel
Yeah, I
pretty.
mean, especially what I want you to notice is just where those price levels where the R10
Mhm.
violate, it breaks the low of the previous. So this is a natural spot.
So
This
you're
right
saying
here,
when price breaks the low of the R10 or when the R10 breaks the previous
I
low?
would go. I take price
Okay,
because especially on the downside, because
it's
it
gonna
goes
lag.
fast.
Yeah.
It goes fast, and this little now imagine you had a big move down and the R10 did this, and you would say, "Oh, okay, that's the price I need to get short at when it breaks below. That's the collapsing dragon." Remember that price candles look like this, and that last, the price could have been like this. The art because there's not much volume in there or whatever. The the R10 might have done this, right? So
Yeah.
the price level that you get when price breaks that, that's your collapsing dragon signal. Whereas most people are using a collapse of the lowest low, and that's where they're putting all their stops. Everybody that's getting long in here is putting their stops underneath the low of the candle. So if this thing works, it works. Awesome. So let's say we both get short or we both get long at the same position. My stop is at the belly of the RL10. So there's my risk box. The guy who is using the absolute value of the bar is getting his risk box here. Now, if that thing works, we're any reasonable exit strategy gets our stop. Both of us get above no lose plus dinner for two, but my initial risk is one half his size, so I can have twice the position size with the same dollars at risk. Conversely, when this thing fails here, when if that's my exit and that's his exit, and it gets long. It comes down here. I'm out here, and I can be short on a collapsing dragon here, whereas he's waiting for this thing to hold. And if it doesn't hold, and it usually won't, as soon as it breaks through this, then all of those stops get hit, and then this thing takes off like popcorn, and it's a big red Niagara because all of those things have now become sell orders. So the idea of uh, the collapsing dragon triggering off the lowest low of the RL10, it's because the lowest low of the previous bar was probably down here. So there's a little moment of it's still a little bit quiet. It hasn't hit full blown panic until this price level is violated because that's where everybody's putting their stops. So when this doesn't work, it gets out faster. It allows you to get short in here, and then you're in the position when that thing breaks and then rockets south. And then as this thing explodes to the downside, your task is to get your risk below your entry instead of putting in an order and hoping you get a good fill. So you're like one step ahead of the thundering herd.
Okay, well, I'm gonna allow myself. I mean, I want to be held accountable for trading this
Yeah,
stuff well,
right.
because let me just show you two more things. One, just to show you that I'm really excited about this addition of the R4 S4 to this. So I entered right here. I
Yeah,
pulled it. I pulled it, uh, making 0.2R because I just got spooked. And then here's another one
yeah.
that,
Now hold that thought. Put that one back on for a second. I just want to show you the a standard play on that would be if my stop is here below the RL10, I should be at no lose plus dinner for two right there.
yeah,
So now my stop can go to here, and now all I'm going to do is from the highest high to my entry. So my entry was here, and the highest high at that moment was there. Keep 70%. I'll get out here. So I keep 70% of that move. And then it did not fail. Instead, it reversed higher. I can get back in here or here. Lather,
yeah.
rinse, and repeat.
So let me show you just for the group, show the entry model that I'm using, and then show you another one. And in a sense, I'm just showing why I'm so embarrassed about how I traded today. But um, so my entry was two
Well, first of
consecutive.
all, just get over that.
Yeah,
You know,
I'm
if
trying.
you
I'm working on it.
and the reason being is if there's an emotional charge with that, then that means that's with you in the trade as you're thinking about it.
Well, and it is because I think I had lost the Oracle before I'd flipped, and so I was trading my
Yeah,
last trade in this one.
yeah,
But to my rule is, I want two consecutive candles over or under R4 or S4, and I didn't get that
yeah,
until right here. So my entry
yeah.
then is one tick above this candle, risking to the low of this candle, and so that
Yeah,
that
here's my the reason I get long right there is because I got a peak RL10, a peak RL10. I've got rising lows, and it broke the PSAR. That is, I am less concerned about the shape or color of the things in here. That's what I'm looking for is higher lows, resistance was broken, and a long term trend was broken to the upside. And it's already had one good move up. And that looks like consolidation. So this move from here has every reason to be as big as this move from here to there. That's leg one, consolidation. Then take this, cut and paste. Yeah.
I like it. That does make sense to me. And then the last one I'll show is basically the same difference, but another one I didn't stay in. So this was the first time. Oh, here's R4. Um, actually, here's you got two candles here. I think I entered here with a risk here below this candle,
Yeah.
and I let it go to break even right here. It's just sometimes I just have to trust the
I just want you to look at those points there. So we got some consolidation here.
Mhm.
This breakout breaks is a breakout from here. So if you got long in here, that's amazing. That's good. If you get out here and you preserved no lose plus dinner for two,
I made $7.
hey, no lose plus dinner for two in terms of R, it's zero point 0.2. What at this point you should be trading for R, not for dollars.
Yeah, right.
Um, when you see this little formation right here, so you have the R10 moves up nicely, it consolidate a wiggle and then breaks again. So when it breaks above this R10, and you got your dragon is going like this, and your PSAR is flipped, and that's probably the RL90 or 30. This is a reentry, and then this is certainly a reentry. In the Hogard press, that would be a reentry. That would be the second position. And the other reason you like this one here is because this is where the Z3 pinched, and it broke out above that.
Oh. Well, see what I did is this big green bar right here. I saw that as an exhaustion rally, and I got spooked as it started to come roaring back
Oh, I
down.
look at that as the optimistic breakout, the
Yeah.
beginning. It's not even exhausted because what you had here was you had range expansion, and then this whole consolidation made the Bollinger Band come down, and then here's a pinch, and that makes this like a pinch breakout. And then your R10 inside that is giving you higher lows. So if you get long here and you get out there to preserve that, then you have to re-enter there not later than there. Especially with 8 bars of it was supposed to fail, it did not. It was supposed to come back into the middle of all this shit. That whole consolidation zone, it's supposed to come back to the middle of that. It and it didn't. It consolidated here, which is really, if I just draw the midpoint of that line, um, the middle of this consolidation zone is right there. The middle of this consolidation zone is right there. So when this thing runs up and it comes back to here, what it's supposed to do is come all the way back to here, but it did not. And it broke out here. So instead of failing like it should do, it decided to break out. So that's the next set of energy taking it north in the same way that this great big bar here was energy pointing north after a consolidation. And then this
Yes,
was a,
I think, my assessment of my performance today is my scanner was killing it. All of these moves that I just showed you, those just showed up. That's what appeared. I didn't trade them to plan. What happened is because of Friday that everything failed, every single move, even the flip in reverse failed. I traded today, I traded Friday. Um, And that's
I want you to think about having a second part. The scanner is the one that's going to do a lot of thinking to really find good compound critical states. Once those things start exploding, you're going to have increased volatility. And now what you want is a simple minded,
trade.
uh, just dude can take a punch and just doesn't think, don't think,
Okay. Yeah, that's exactly
trade. So you enjoy this part.
that's the work I put in.
You
Yeah.
would rather do that than trade. You find this more satisfying and enjoyable. But this guy pays the bills to give you the freedom to explore. So you got to let that guy, you got to give him some room to work.
The scanner.
The trader.
Yeah,
If you're finding if you're finding good things but then talking yourself out of positions,
that's exactly what's happening. Well,
you
again, because
let the scanner think and find the good position, then he's done his job. Let the trader trade, let him do his job.
well, and what I really like about the four bullets principle is I'm telling you, this is everybody's life, right? I'm sure everyone's had this experience, but Friday, nothing worked. Today, every single signal and mechanical movement of this system that I'm doing worked, but I TQN'd it out of existence. So yeah, I like that. I have to be simple, more simple-minded and realize that I did the
The
work.
market doesn't remember day to day. The market
Yeah.
doesn't remember trade to trade. It generates what it's going to generate. All of the guys who came together and made Friday what it was, that was a unique moment, never to be repeated. So, the tendencies, yeah, compound critical states, um, think hard to find them, but you got to trade with less thinking
Okay.
and simpler flows. Like the failure to fail, if I got a big sell off and I get the first initial SSC and it works, and now it comes back to the midpoint of this. No amount of thinking is going to predict for me whether it's going to do this or that. It's going to come. That's the channel now, and you just exactly don't know which way it's going to go. So when you have a tight risk here, you if you're still long from here, you got to cut this as soon as it goes that way and be ready to enter down here. Or you got to add a position as soon as it gets here because it's going to come test this. If it comes back and tests this, you have to preserve most of that move, and you have to have another position lined up ready to go. So if it does break through there, you get surprised into that position without thinking. Without thinking. As soon as I see this move, I've got a buy signal here and a sell signal there that will leave me, net one. Whatever size my position size is in here, the size of this trade will cover that and leave me net one and add one here. So the fact that it's here, I already know what's going to happen when price gets to the. I don't care what the. I don't care if that happens in 2 bars or it goes sideways choppy and it stays inside that channel for 20 bars. I'm still going to get long here and short there.
Well, and it makes me think on the failure trade, instead of the net one, is to add that second position and actually just end up
Yeah.
to our
Yeah. The question, on this one, is uh, that would be a caught of two short in here before it breaks out. And then
Uh-huh.
that would be your second position. But whether you go short here is a function of what was the previous move. If this was a big red down, then you can caught a two that short because now your pattern is this.
Yeah, second
You
leg.
you can caught a two this, but if this was just monkey business and it's here, that's not a caught a two. You're in that case you got a consolidation, and you got to wait for this.
Okay.
So
All right.
what that last big previous move was matters a lot. Okay,
I really appreciate it.
you're in good
I
shape
want to
here.
make sure Ashay gets this time.
You're
I
in good
promise.
shape here. What is it? Answer me this one. What is that piece are built? Oops,
Oh, I'm sorry. I
I
can go back.
wanted to see something on your chart. If you could share that back real quick. I wanted to ask you what the what is
It's your settings.
let's see. This one right here.
Oh, I thought you were asking me what the PCR settings
Yeah,
were.
this piece are dot right here.
It's 0.212.12.
Point 2, point 12. And what's the data source?
Oh, let me look. Are you not seeing my window of the settings?
Yeah, I mean I see this, the point 2, point oh 2, and 12. What is the what are you using as the price data?
I don't know.
Price?
5 minute price bars? I
Okay.
don't know.
Yeah, so one of the things that we found very helpful is that we use the price value of the R10 or of the RL10 as the price. And that will
Oh,
make, yeah, that really smooths out the PSARs.
interesting. O'Shea, is that what you're doing?
Yeah, I have two of them. One's the RL10 based PSAR, and the other one's just the price based. But I am using
What
the
you'll notice,
RL10 one.
what you'll notice is that the uh, the RL10 as the price for the PSAR does not get shaken out of things.
Okay. I might
Like
have to write a custom script. I don't see an option to select a data source in Thinkorswim. But
I think there's a way to do that. I think the um, Phil and Griff I think figured out how to do that.
okay.
But
But
anyway,
I'm sure
that's a
like I can see the code for the PCR, so I can feed it to ChatGPT and just have it mod
yeah.
it.
Yep.
Thank
Okay.
you.
All right. Ashay, you got something? You ready?
Yeah, I'll share a trade that ended up working out today based on the automation. So give me a sec. This was Rigetti. You see it?
Yep.
Okay. Okay. So this is like I said, this is Rigetti on 10 minutes
Okay, so left side is
and
10 minutes and then 30 minutes and daily.
30 daily and
Yep.
then weekly.
Okay.
And the
Nice.
here, let me just make it a little bit bigger.
Look how good that 30 is.
The 30-minute here.
Yeah.
Yeah. So on the 10 minute, the strategy took a short right in here.
Yeah.
Took a stop loss at the PSAR.
Yeah. Was that a
It ended
stop and
up
reverse?
it did not go long right away. It went long after the close of the next bar.
Yeah, it should go
So
right away or not at all. And the reason I say that is let me find my annotator here.
yeah,
Uh, yeah. Yeah. So your peak of the RL10 is here.
okay.
So that's going to be, if that were a straight line, That would be your resistance. So here's where the RL10 reversed. So if I'm, let's see, you said you were short here, or you were, where was it short? Oh, in
Uh,
here?
Short in here. Yep.
Yeah. Yeah. So in this case, the VWAP, that's a really good exit right there. But now when the R10 reverses, you now have a channel that goes from here to here, right?
Mhm.
So if I take that and cut that channel in half again, if this was my risk, I have to get I if I get long at this 50-yard line, I've only got this much. I've got those 2 units of reward for 1 unit of risk. There's my, and that's if my risk is here. If I use the full risk down to here, I've only got a 1-to-1 to the place of expected failure. So the only way I can get inside this space here from once where I exit, the only place I can really afford to get long is going to be right about here. And I have to use about that much as my risk in order to get 2 units of reward to the test. Now, what I have is a buy limit right here to go long if it clears the peak of the RL10. It's only when I see price get above that that I have evidence of continuation. So inside this channel, I have to somehow figure out how to make that a 2-to-1. So if I'm going to trade inside that channel, then then the price that got me out is the price that gets me in here. And then if you get this stop and reverse here, and you had this maximum favorable excursion to just short a resistance, you have some time in here to turn this into a winning trade. You certainly could, if you get long here, you cannot let it go below the VWAP. So you have that much wiggle room to get out. This is a great trade, a good trade, an average trade, break even trade. And then when this thing breaks right here, if you're not murdering that to the short side, I'm going to come through the screen in the future and get you. Right. And here's why. Because you got this peak of the RL10, you have a well defined support level there. You have a lower high. It broke the VWAP. So you have this pattern. And it broke below the VWAP. That's what happens when the VWAP breaks. You had this chance to try to break out and make new highs. It failed. It couldn't even get to the previous peak. In fact, it broke. It only got to the high of the day and then rolled over. So I got to get short here.
Yeah. And luckily the strategy did get short
Beauty.
right there, and it did capture this
Now, here's where the
basically two
Hogard
hour.
press is. So if I'm short here, and
Hmm.
there's the belly of the RL10, imagine that were a straight line. Somewhere
Hmm.
in this region, not later than here, I got to get another position in because this is the void. There is no support whatsoever in there at all. This was the last gasp for the optimistic buyer.
Yeah.
And
And
then
real quick,
this one, you can even argue getting short again. Looks like it might have.
yeah, it did. Yeah. And it's programmed to use the RL30, like looking for owls on the
Yeah.
long. So I think
Yep.
that's why this one is late. Here's that dark gray
Yeah.
RL30.
Yeah. Now
So I
here's
could
the
get rid
owl.
of that.
Here's the owl. This
Yeah,
is the
maybe
owl.
that's short. Yeah,
This
that's
is
why it
the
got
owl
short
short.
there.
That's the
Yeah,
owl short there. Yeah.
yeah. So mechanically, it's doing this. So like if I want to get in earlier here, well, there's two settings that I can change. Either get rid of the RL30 as a filter, or currently TradingView has this setting where you got to wait for the bar to close
Yeah.
before it will fire the order off.
Yep.
I can change that calculation. There's a setting I can change it like intra bar if the conditions are met.
But
Just enter.
here's what you might look at
Yeah,
is
yeah,
this was the PSAR on the bar that exited you.
yep.
Go to the PSAR dot -1, which is this one,
Okay.
and
Hmm.
set that equal to the buy entry. Because then the bar is live and but this is already printed. So that's a
Okay.
computed known price. Like
Yep.
the PSAR dot for this bar doesn't
Yep.
print until that bar closes, and then that was the PSAR flip. And then you would
Right.
want to enter here. And the difference between entering here and entering here is a world of difference when
It's
your
quite a bit.
expectation is that it can only get that high to here.
Right.
So PSAR -1, the PSAR dot from the previous bar turns out to be an interesting price level. So what you can actually do with that, the idea is, uh, you had a run up, and now the thing is coming back to, and you're hoping to buy on a dip, and so the PSAR dots are trailing down here, and
Hmm.
as each bar continues to drop lower, you have a buy stop order on the PSAR -1. So I'm gonna I'm gonna buy here, and I'm gonna buy there, and I'm gonna buy there, and I'm gonna buy there, and then suddenly you get that sharp reversal, and it comes through and it surprises you into the position.
Okay. We'll give that a try.
Give some thought. Give some thought to that.
Give some thought to that. Yep.
Yeah,
Okay.
I mean, I
Uh,
want you to have the idea and think about it. I'm not saying hurry up and
yeah.
trade.
To go do it.
Yeah, yeah,
um, I was looking at some of the ETFs that Eric was trading
yeah.
over just the last 7 days. Um, the results were pretty
Yeah.
solid
Yeah,
with these settings. You know,
EWW,
here's
EWZ are just
yeah,
massively good. They're very
yeah,
liquid. They are not Europe and not Asia and not the US. They have their own currency. They're two of the largest non-US European economies. They have a full range of market sectors and all that stuff. And again, they have their own currency, so they're the least correlated to the U.S. and Asia and Europe. So it is, and their signal to noise ratio is very high compared to the U.S. indexes, meaning that it has a lot of intraday signal, not noise. Once it moves, it tends to be more directional intraday and makes exactly that kind of move that you see there.
yeah,
Like once it goes, it just keeps going. It doesn't have the same kind of. If you look at the NQ and the ES, a lot of time that has intraday jockeying for position with guys on multiple time frames, all muddying the waters. You get a lot of intraday volatile noise. Mexico and
yeah,
Brazil have less of that. That there's less jockeying for position, so it tends to swing intraday better than the U.S., but they're also very liquid. So anyway,
yeah, yeah.
look at
So
that
that's
beautiful
kind
one,
of
two. There's your 1, 2, 3 entry.
let me go back to that. Here's FXI. That did well. So I didn't trade this today, but the strategy would have gotten long right there
Yeah.
and exited up there. I've got the keep percentage programs, by the way.
Yeah,
So the
it'll
MFE,
clarify your mind.
yeah.
Well,
So right now I'm
the
using,
best part of it is that it frees up your mental energy to go look for more targets because
yeah.
it cleans up after the party.
Would you recommend, so the settings I have for this are, at 2R, start to keep 75%, and then at 3R, keep
I
80
think so.
or 90.
Those are in the ballpark.
Okay. And I'm using an R5 box.
Yeah,
So
I think you would.
20% of
Yeah, those will do
of
you
the
good.
range then.
Yeah,
Okay.
because what that does
Okay.
when you get a 5R win, you're keeping four, and that'll
Yep.
make you feel very professional.
Yep.
And
Um,
yeah, now if you have if you get in the habit of adding multiple positions, you might need to keep 70% of the dollar value. You know, you figure out at the maximum favorable excursion, you have a maximum capital gain, if I can say it that way. And uh, you, but because you got multiple positions on, a half an R retracement is now a full R of capital, right?
yeah.
Uh,
I'm gonna have
so
to think about
so
that.
what you want to do is at anytime I get that, certainly by the third position, but anymore even by the second position, I'm looking to keep 70% of the maximum favorable capture, maximum favorable dollar capture, just to keep it
Okay.
simple. And that
I'll
way
have to
you're
look
not
at the
trying
code
that
for
way
that.
you're not trying to parse the thing too closely. And my
Yep.
tendency is to increment in but then all out.
Yeah. I think I prefer the same. Okay.
Yeah,
Yeah. So that's kind of what
like
I'm
those.
working on.
Okay, you're in good
Yeah.
shape there. Hey, I wanted to just show the
Yeah.
show something here with yeah. So on a much wider time frame, the 3 day and the 9 day bars. Um, you guys are working hard on the intraday stuff too, but when you start thinking about the swing trades, at some point you will.
Hmm.
Let's see, you want to. So I use like the 3 minute, 10 minute, 30 minute, 2 hour daily. I use a 3 day bar. I know there's a weekly, but I really use the 3 day and the 9 day. And I don't really watch the weekly and I don't watch the monthly. What I find is that the 3 day is a nice trade off. It's much smoother than the daily, but it's 40% faster than the weekly, right? Because like in 4 weeks, which is 20 days, I have 4 data points on a weekly bar, but I get 7 data points on a 3 day bar. So I like having the extra information. This is what Rigetti on the 3 day looks like. I call this one the sunrise sunset. So the long period of neglect, alert, confirmation, and then this little gizmo right here, the fact that I got the close and the open and it takes that out, I add or re-enter, add, probably add again in here and add here. Now, this little piece once I get the whatever the last close was, once it gets below here, I better have the keep 70% on. With that kind of a run, by the way, from 18 to 58 plus 40 divided by 18 is about 220%. So uh, this little this little gizmo here, yeah, a little gap up, and as soon as that goes below here, I'm looking to short and then looking to short again. And my target's going to be, all of these things. So this is the sunrise. This thing is just pain and suffering. It really shows well on the 9 day too for the longer term. Uh, this that should never happen. You should not be watching that go down. You should be saying, if I should be able to get long somewhere in here, either from the peak of this or the breakout from that, somewhere in this region. I just got to hold my nose and get long. So if I can get long at 20 and I get to 58, that's plus 38. At that moment, last week or 2 weeks ago, I got to keep 70% of 38, which is 21 plus 27. So that means my stop had to be at 47. So that's what keep 70 looks like. Even that feels like giving back too much to me. That's where, if you've got greater than 5R, you should really be thinking about what's 80% or 90% of you want to bring home the whales to feed the tribe. So one of the things then is uh, the 3 day the 3 day bar does a really nice job of smoothing out the gaps and making the patterns really stand out. We this You could expect to see this pattern on all of the story stocks. And now this thing is, once this thing breaks, that's like a whole new. And you heard me talk about this a couple weeks ago. The whole it's a completely different era. None of this, none of this enthusiasm applies on this side. This is all damage control, and all the optimism in the world will help you here, and all the optimism in the world will kill you over here. This is where you got to be ruthless, a ruthless scavenger. All I care about is if that's the RL90. Hey, the RL90 on a 3 day bar, that's the same as the 270 on daily bars. That's the long term fair value. So I don't know how far down the stack this is going to get to 28. Anywhere in here is a possibility of a buy on dip. And the farther it goes, the better I like it, because now the channel to me is 58 to 28. You know, what I'd like to do is see it come all the way down to 28, and then I can take this, cut it in half, cut it in half again. And then if this comes down and finds 28, then I got to be buying it not later than 36. So that's 1 unit of risk and that's 3 units of reward. So we call that the rule of 4. And if you're looking at 50 symbols for long-term swing, you can scan 50 symbols in 10 minutes on 3 day bars and find the things as they start breaking out. And that will help your long-term trading quite a bit. All right, that's everything I got for tonight. We'll get this posted and uh and updated.
Thank you so
Good.
much, Ken.
Thanks, Ken.
That little icon you have in the lower right in your bar, the Nitro icon. I was the chief product officer for that company.
Oh, Nitro PDF.
Yeah.
Oh, hey, genius. Genius product, man. I'll tell you what. The that little yeah, the tools are better than Adobe's, I think. It,
Well, we got acquired. Thank you for that. We got acquired by private equity, and then the entire
yeah,
management team, including myself,
yeah.
got replaced by the PE's
Well,
teams.
well, there you are.
Not there anymore, but we.
I love the product. I've been using it for probably 10 years
Oh, great.
and have I just I was an Adobe guy for a long while, but man, they just want to gouge. It was like, dude, sorry, no longer.
Yeah, that created the soft underbelly for us.
Yeah.
But all right. Well, hey, thank you so much.
All right, fellas, take good care.
Okay.
You too.
Bye-bye.
Bye.
Ciao for now.